Okay, welcome to the Zoopla House Price Index, January 2026. This is a review of Zoopla real-time information, what they think's happening, well, what is actually happening according to Zoopla's website and their data that they're gathering and collecting all the time in the marketplace today with the UK house prices. So the executive summary for Zoopla is UK house prices have increased 1.2% over 2025. In 2024, it was 1.9%, so it's a wee bit down on 2024. Confidence returns after 2025 autumn budget uncertainty. Buyer demand rebounds as 2026 gets underway, tracking in line with 2024 levels and 9% down on 2025's strong start. Housing supply actually rises, giving buyers more choice. That's the key here. It will stabilise prices as well, more than likely as well. City level house price inflation varies from minus 2.6 to plus 5.5%, highlighting wide variations in local market conditions. Average mortgage rates reach lowest level since 2022, and higher selling stocks put pricing discipline front and centre for sellers, especially in the south of England. Let's look at some numbers here for where we are right now. Love graphs, definitely. Here we are. So this is the house price index, 1.2% house price inflation. Buyer demand is down versus year on year by 9%. So in other words, supply is going up, but and you can see supply is going up, buyer demand's going down. So there's a wee bit of inequity in there in comparison to the other years. Here in a graphical form, what it looks like. Market activity rebounds, but falls short of a strong start to 2025. So buyer demand down 9%, flow of new supply down 3%, stock of homes for sale up 6%, so there's more on the market, and number of sales agreed down 7%. Overall, really, it's a bit of a stabilised market. It's not too bad in consideration. But what does Zoopla have to say about this then? Well, there's a strong rebounded demand, but 9% down on the year before. So housing market has recorded a strong seasonal increase in buyer interest over the January period, following a quieter end to 2025. Many would-be buyers delayed moving decisions late last year due to the budget uncertainty in autumn. But our data, Zoopla's data, shows that confidence has started to return in the marketplace. We're actually beginning to see that at the beginning of the year now. So the start of the year mirrors that of 2024, but the data that Zoopla has shows demand is 9% lower than the very busy start to last year in 2024, where buyers were rushing to beat the end of the stamp duty relief in the April period. Now, more buyers means more sellers, and there has been a sharp increase in the new homes newly listed for sale, as well as more sales being agreed, although both measures actually remain below last year's levels. Now, one noticeable difference to last January is the amount of choice available to buyers. The total number of homes for sale is 6% higher than the last year, and average estate agent currently marketing 34 properties in total. The highest level seen in 8 years. That means supply is going up. Demand goes down again. You see that's why it's there's more properties on estate agents' book than there was in the last 8 years itself. This means buyers have more choice and sellers may face more competition. Let's look at that in graphical form and see how that looks. Here we are here, as you'll see. Now, we see that there, the first one here, this shows in 2023, the 2022 mini budget pushes mortgage rates towards 6%, hitting demand and sales over the 2023 period. That's why that dropped quite dramatically in terms of buyer demand. And then when it came into the beginning of 2024, the base rate stopped rising in September 23, sparking a rebound in activity because people got a bit more certainty. Mortgage rates fell below 4.5% in February 2024, boosting the activity. See that buyer demand there? and then again it came down slightly a wee bit. That's probably a seasonal fluctuation, I would say, and then strong second half in 2024 and the first of quarter 2025. Buyers tried to beat stamp duty deadline, which was there. The stamp duty deadline coming in here, people are actually, demand started to peter off as the buyers were starting to catch them here way in advance for that April deadline. And then the autumn budget comes along and speculation starts in late August 2025, hitting activity in the second half of 2025 itself. So you can see how sales agreed dropped, buyer demand dropped as well towards the end of the year. So you can see how it mirrors all the way across, definitely. It's kind of a good start to 2026, I would say. Very positive, good outlook, stabilised market. Everything seems okay just now. Health of the market, number of transactional numbers are actually still healthy as well, similar to the years before in terms of the number of properties sold, which is a good indication about how healthy the property market is. Not necessarily. Remember, house prices are only an indication if you're an investor. They don't really tell you anything otherwise, or if you're going to be buying as a first-time buyer, or because if you've got a property already and you're buying another property, you're trading like for like in terms of property price increases. Okay, so the house prices have actually increased over the 2025 period of 1.2% overall. So the average UK house price has increased by that, lower than the 1.9 in 2024. The average house price grew by 3,200 to 270,000 at the end of 2025, according to Zoopla. House price inflation, remember this is real-time, kind of more accurate information, up-to-date information, as opposed to land registry, which is historical information recording. And this is more real-time recording. So there are good complementary reports, the National Statistical House Price Index versus the Zoopla House Price Index. Now, Zoopla goes on to say affordability pressures, higher stamp duty cost, and a much greater choice of homes for sale explain why London has recorded a 0.7% decline in average house prices over 2025. Smaller falls of 0.1% recorded across southeast and west regions as well. That's quite typical when you realise the market's starting to balance out. The south in London tends to decrease in price slightly overall. We just want a small decrease there because it usually it's like a wave, how it builds up over time, or how a ship leaves the harbour and then the momentum gains. So you're kind of wanting London to not have such an impact on house prices, because then it ripples right throughout the whole country and into Scotland. So city level price inflation reflects local affordability for definite. Zoopla goes on to say the housing market is very localised and market conditions vary widely around the country, meaning that home buyers and sellers face different considerations depending on where they live overall. The highest house price growth over 2025 was recorded in Burnley, where prices increased by 5.5%, over 4 times the national average. Several other towns and cities across the north west recorded price gains over 4%, like Rochdale, Blackburn, Liverpool and Wigan. All of these towns and cities are characterised by having average house prices below the regional northwest average of 205,400. Now, buyers are actually seeking value for money, are boosting demand and pushing prices higher, back to by improved mortgage rates and more lenient mortgage affordability checks. The number of homes for sale in the northwest is also 7% lower than a year ago, limiting buyer choice. House prices have risen across most of the towns and cities of the south eastern England, as lower house prices, better affordability and smaller levels of supply have resulted in modest house price gains. So where does that place everywhere right across the area? Let's have a wee look at their graph and see where we are right now. Here we go. Okay, so you can see there, this graph is affordability is now the biggest driver of local price trends. And you can see there affordability levels, more choice of homes and higher stamp duty costs act as a drag on house prices. See, there you go, your house price inflation. So affordable here overall, you can see that We're getting into Aberdeen there as well. And then as you come across, you're starting to get into the lower house prices, better affordability, less choice of homes, lower buying costs supported by house price inflation. There's Edinburgh in there, quite reasonable, I would say. And then you get up to Burnley, which is actually getting a lot higher and a lot less affordable overall. So when we look at that, then prices falling in cities across this southeast of England, as I said, have some kind of ripple effect. But we've got to watch out for that. So what does Zoopla say about this area? Because this is a good indicator about what could be to come in Scotland. House price inflation is the weakest in the south of England. This reflects higher house prices, which makes buying more expensive in terms of the mortgage payments and stamp duty. In addition, there are a greater choice of homes for sale than a year ago, reinforcing the buyer's market overall. Still not a buyer's market as such, but it's a balanced market, I would say. London has more than 14% more homes than a year ago, with 3 to 4% more homes for sale right across the southern regions of England. Now, there is demand to buy homes in southern England, with the Zoopla's analysis shows buyers are price sensitive, as they are in Scotland. Market conditions will vary at localised levels, and you can see that because St Andrews is at the top end of the market in Fife, and then you've got the other end of the market, which is central Fife to West Fife itself. There is demand for there, but the analysis shows price sensitive. Market conditions vary, as I said, across localised areas. While most sellers are sitting on sizable capital gains over the last 5 years for their current home, they need to consider what local buyers may be willing to pay and factor this into their budget for their next home overall. Let's look at that in graphical form. So here we are. What does this tell us? Overall. Well, okay, so this is the buyers, it's the buyer trend. Buyers have more choice in the south and less than the north. You can see there you've got Scotland, you've got less choice here because the change year on year and supply is down. So Scotland's actually less choice, so therefore more buoyant market overall in terms of sellers market. And it changes, and Wales is still there, and then it moves into southern England, and then into London. It's like, yeah, okay. So the supply trend, 14% more properties in the market in London than the year before. So what is driving this overall? Well, many buyers can now borrow more than what they have a year ago. And the last 2 years have seen strong rebound in sales and households making home moves after the shock of higher mortgage rates in the recent years. Last year saw the highest number of sales completed since the pandemic, 1.2 million right across the country, right across the UK actually. Mortgage rates have stabilised and the mortgage market remains very competitive with attractive rates from home buyers, especially for those with larger deposits overall. The average mortgage rate for new loans dropped to 4% in December, its lowest level since September 2022. In addition, many households can borrow up to 20% more with the same income and mortgage rate than a year ago, which has supported more homes and moves and higher house prices. Oh, excuse me. Okay. Now, that then supported higher house prices, affordability and buying costs to allow understanding what you can afford as an important step in planning your next move. So what's the outlook overall then? Well, more homes for sale means more of a buyer's market is leaning towards. This shows the desire to move home remains, but sellers must factor in local market conditions when they plan their move. Speak to your local agents to discuss how to price your home to attract good levels of buyer interest. And Zoopla expect the current trends in the market activity to continue over the early part of the year, and there's a healthy demand for homes at properly priced levels. Let's just look finally across the UK in graphical form, but also in the map form as well. Okay, so here's the map first, as you can see. Let's zoom in on that so you can see it. So you'll see there, see the house price differences across the side there. You've got Belfast, and here, just jump back to that. The wrong button there. So annual price change in house prices: Belfast 7.6%, Liverpool 4.2%, Glasgow 3.2%. You've got Manchester, you've got Oxford, you've got Edinburgh 1.6%. You've got Aberdeen minus 0.6%. Aberdeen's still suffering because of they're no longer drilling for oil and stuff like that. Oil industry's on its knees. Renewables is struggling as well in some shape or form. But you can see that in graphical form right across Scotland, up 2.9% year on year. Northern Ireland 7.6%. And you can see as you get down to the southern regions, London, southwest, southeast, it starts to drop, but just slightly. So, you know, we're kind of okay with that. Average house prices according to Zoopla. This is what Zoopla's seeing in the cities. 163,000 in Glasgow. Average house price according to them. When you're looking at Edinburgh, 281,000, and Aberdeen 133,000, and the rest of the UK. We still have, if I can see it there, at London, average house price of 526,000. Is that all? I'll have three. So hopefully that's given you a good insight into where the market is right now. Balanced, overall, I would say. Good outlook for 2026. Good start to the year. Mortgage rates just been announced. They're on hold, but it's a real tight split decision. So next month, in March, you could find that mortgage rates the base rate might actually drop again. I think by then, when it comes along, I think the market will have factored that in. That all depends on unemployment statistic coming out, and also the inflation statistic due to come out as well. That will contribute to that figure overall. If you need any more information, any advice, feel free to message us direct on this post, or you can reach out at any offices or any of the office numbers. Until next time, guys, I'm Jim Parker for Fife Properties.